Hi, Joe Lubin. Good to see you. Thank you
Hey,
for
Josh
being
Quittner.
here.
Thanks for having me.
As is traditional in Ethereal, you always have the last spot. I don't think it's traditional that you have an interrogator, so I have the privilege today. I wanted to start off by talking about ConsenSys, the company that you founded. At some point soon, people will be going back to dinner with strangers, and at some point, maybe soon, you'll have dinner with somebody who doesn't know what crypto is. That's kind of hard to imagine, but it could happen. How would you describe ConsenSys to that person?
Thanks, Josh. So ConsenSys started about a year into the smart contract era of the decentralized protocol revolution. And we essentially reformed to foster adoption to build out the Ethereum ecosystem. So we started as a company called ConsenSys AG. We did lots of incubating of projects. We did lots of investing in projects. We threw a lot of spaghetti against the wall, and quite a bit of that spaghetti ended up sticking nicely. So we have spun out many projects over the years and have built some of the most important projects in the Ethereum ecosystem and in the blockchain ecosystem. So, more recently, we spun out a company called ConsenSys Software Inc., which recognized that several of the major elements of ConsenSys and of the Ethereum ecosystem were coalescing into a blockchain stack. So it's our Ethereum client, which is a public mainnet client, but it also has enterprise friendliness extensions. It's called Quorum, and it's based on Hyperledger Besu and a bunch of very useful pieces. And that's essentially our enterprise organizations platform. Another platform is our developer platform. So that consists of Infura, an infrastructure system that enables software developers to more easily program decentralized applications. And Truffle Suite, our developer tooling suite, and Diligence, our security audit team and set of tools, and our customer success group. At the consumer layer, we have MetaMask, which recently crested 5 million monthly actives, and it's poised to become the interface to the increasingly decentralized web for both people and organizations. MetaMask Institutional is in private beta right now. And we have a group called Codify, Commerce and Decentralized Finance, that builds applications that can be delivered into those three platforms, essentially.
Great. So basically, you're an Ethereum, or ConsenSys is an Ethereum spaghetti factory.
So we started making Ethereum spaghetti because that was the healthiest spaghetti out there, the most expressive technology, the most powerful technology. And we've looked at supporting different protocols over the years and have always done the calculation and determined that they weren't ready. There wasn't enough, essentially, volume on those systems to justify us not focusing our scarce resources on furthering our Ethereum focus. But things are changing pretty rapidly in our ecosystem. Ethereum is growing spectacularly, incredibly, exponentially quickly. So we will continue to focus mostly on the most capable and successful platform on the decentralized world, but certainly recognize that there are lots of good other projects out there. And the future is an internet of blockchains, and we're looking for ways to build bridges and unify approaches for consumers and for organizations to the whole universe of decentralized protocols.
and I want to return to that in a second, but to finish a little bit on the ConsenSys piece, ConsenSys recently raised $65 million to converge traditional and decentralized finance. I think that was what you said, or somebody at ConsenSys said.
I did say that.
Yeah. Mm-hmm. Well, can you talk a little bit about your convergence thesis? What are you seeing from payment service providers like MasterCard in terms of their interest in DeFi primitives?
Yeah, so we raised a round. Importantly, it was from the traditional world of finance and the blockchain world. VCs and protocols from our ecosystem were roughly equally, well, perhaps a little more from our ecosystem, but effectively equally represented. And that is in line with something that we've held for a long time called our Convergence Thesis. And the Convergence Thesis holds that similar to how the internet and the web technology constituted a democratization of access to information, of the ability to publish or participate in or construct e-commerce systems, social networking systems, etc. This next revolution would be the democratization of finance, essentially, and it's more than just finance. It's decentralization of governance, and effectively the convergence thesis sees the evolutionaries, like major financial institutions, joining us revolutionaries in building better infrastructure for the planet. And so we focused most of our effort over the years on the public permissionless blockchain side of things, but we've always wanted to make to meet the evolutionaries where they're most comfortable, and so that involved giving them access to the exact same Ethereum technology, enabling the development of private chains and consortia, and these are used by them to make business models more efficient or to experiment with new business models. And so we have increasingly sophisticated pieces that bring the two kinds of organizations together. Quorum managed service will be discussed in some detail going forward. It'll essentially enable organizations to build their own private networks or public permission networks on cloud. Baseline is a protocol that will enable organizations to link up their systems of record, data agreements, etc., to one another, keep them in sync in real time in a global frame of reference, the Ethereum public mainnet, and to tokenize a bunch of things that they care about and soon participate in DeFi.
And so you're seeing good uptake from payment service providers?
We are certainly seeing major financial institutions, including payment service providers, embrace the Ethereum technology and consider Ethereum their stack of choice.
And presumably a lot of that that interest is part of what's driving the huge bull market that we're in right now. Something like 13,000 people signed up for Ethereal this year, which was exponentially larger than last year, which granted was in a bit of a trough. Lately, I've been hearing you use an ancient Web 1.0 expression, a paradigm shift. But it actually sounds like you're starting to think that that's happening, that this is more than just a bull market, that there's something else that's going on. Are we there yet? Are we shifting? Or do you think this is mostly, there's just an enormous amount of bull market hype?
It's very clear to me, and I think to many people that I talk to, the paradigm shift is definitely on. It's fully active now. For a long time, it was speculative or incipient. We all knew it was going to come, but it was trademarked soon. And it involves a few different transformations at sort of a high level. You can think about it as the planet's infrastructure becoming increasingly online and digital. We're moving from natively analog systems to natively digital systems, and all this has been hastened, of course, by COVID. We're evolving our reliance on centralized subjective trust systems to decentralized automated objective trust systems. We're moving, this kind of enables us to move from coarse governance systems to granular governance systems. These granular governance systems, they're happening right now. There are a lot of DAOs that are functioning remarkably well, governing usage of assets, evolution of protocols. So it's really remarkable to see that take shape. And we have so far to go to build really good governance, but it's very cool.
I know you always tell us that that's what Decrypt's future is, a DAO.
Yeah, absolutely. Hope we get to talk about that a little bit later. And bottom line, like from a really macro perspective, it's all about moving from a zero-sum scarcity mindset or fear mindset to a positive-sum mindset of essentially abundance. Our society's been organized to move atoms around, deliver them just in time to the right place for a long time, and now with automation and technological developments, we're going to be able to leave that to the machines, to automation, and increasingly devote our attention essentially to moving ideas around in virtual digital worlds. So we're moving from the world of atoms to the world of bits, as you probably remember Nick Negroponte saying.
Yeah, I really want to believe that, but we've been hearing that since what, the 50s, the 60s, theory of the leisure class, that as more things get electrified, it was back then, and then automated, that we would have less work time and more fun time. But it hasn't.
It would take more than just electricity to get that done. I guess it took a little more organization.
But so
anyway, we are to give you a fuller answer. We're crossing the chasm. So Jeffrey Moore, in his book called Crossing the Chasm, essentially laid out what the chasm is. It's between the early adopters and the early majority, and essentially our technology, our ecosystem, or call it the four horses of the paradigm shift, they're riding across the chasm right now. Actually, they're galloping across the chasm right now. And I think of those four horses as blockchain, as crypto, as DeFi, and NFTs. And so we have all the right people, the right kinds of people that have been coming into our ecosystem to essentially deal with the lowest hanging fruit that were accessible. And guess what? We're able to reach higher and higher. The first set of people, the first horse, blockchain horse, was cypherpunks, cryptographers, protocol designers, monetary theorists, etc. And then second horse, cryptocurrency, you get exchange operators and traders, wallet creators. Third horse, you bring in the finance nerds into decentralized finance, and they become crypto finance nerds. And people start designing blockchain-based financial instruments and mechanisms for wiring up these DeFi protocols. And finally, which is taking us into popular culture, NFTs. And so it's artists, it's real people, normal people, artists, creators, content owners, and what's one of the elements that's really driving this are the pop culture megaphone people. Mark Cuban, Elon, Gary Vaynerchuk, Ed Snowden, Mr. Michael Novogratz. Michael Saylor's done a really brilliant job, moreover in the Bitcoin space.
Yeah, well, I think it's interesting that NFT is your fourth horse. Obviously, ConsenSys has supported and is actively engaged in a whole bunch of NFT projects like Euler Beats, part of Trium.
For a long
and
time,
also-
but Ujo a few years ago.
Yeah, I remember that. And a JV called Palm NFT Studios. Can you talk a little bit about ConsenSys's NFT strategy? NFTs have been around for a while. Why now?
Sure.
What happened? What changed?
Well, a lot of us saw the promise. I guess just like in the 50s, some people saw the promise of certain kinds of technology and expected things to happen 8 years in the future, but it took 80 years maybe. So I think of NFTs as essentially a massive breakthrough in the field of software. Biggest thing in software since the advent of software objects.
Wow.
NFTs enable artists, creators, other kinds of content owners to essentially establish direct relationships with their fans, their consumers. Enables content creators or owners to monetize in many imaginative ways. So with each piece of content, you have a bunch of potential rights that you can give away for free or exploit monetarily. And exploit is not the negative term, it's just a sort of term of art in the industry to make use of. Programmatically, we can define rights and we can unbundle many different rights. And so who would have thought that you can sort of unbundle the right to display on billboards from the right to display on personal picture frames versus the right to display on corporate picture frames or something like that. And so formerly all these rights were bundled up, and so there's so much ability to exploit content in healthy and monetizing ways that was just not recognized. And so artists can now sell different aspects of their work essentially without selling their souls, which they really had to do in order to participate in the intermediated world. But NFTs are just much bigger than wrapping content in software. So we'll have digital twins for your house or your car. You'll be able to own your car and operate your car through an NFT and lend your car to a friend without giving your friend the right to open the glove compartment and fish around in there. So lots of business models and representations of real world assets will be achieved through NFTs.
The so-called valet key. Can you talk a little bit about Palm? I've heard some chatter internally, but I think it's a kind of an interesting thing that's getting off the ground. How's it going to change the NFT dynamic?
Yeah, so Palm is so exciting. I'm personally incredibly excited about it. It's a huge buzz inside of ConsenSys, and we have partners and have stood up a separate company called Palm NFT Studio. So Palm is essentially a blockchain network using the same Ethereum stack, blockchain technology, essentially with quorum at its base that we use in other kinds of commercial engagements, essentially. It's a side chain of mainnet Ethereum. We're using a bridge from our friends at ChainSafe to enable tokens to move back and forth between Ethereum mainnet and the Palm network. And so on top of that network, which ConsenSys is standing up, and we actually have a test net running already, and we think we're going live end of this month or early next month. But it's not a public deadline, so hopefully nobody's listening to this. But on top of this network, we and others will be operating NFT platforms, so software platforms like Nifty's and Meme and Henny Studios, Fine Art Studio, and Palm will have its own NFT platform. So super excited. It is, I believe, the engineers are arguing whether it's 1 million or 10 million times more energy efficient than mainnet. So it's greenhouse gas friendly. Transactions will be cheap. It will evolve probably in 9 to 12 months into a layer 2 system anchored into Ethereum, and it it's an NFT-enabled network that will be intimately connected to DeFi. And we have Uniswap and some other major DeFi protocols in discussion. Uniswap is committed. Protocol Labs is committed for permanent storage. And effectively, DeFi needs to take into consideration some of the unique characteristics of NFTs. NFTs will be realized through different standards, not just 721 and 1155, but those will be the main ones to start with. And so we will be building DeFi for NFTs intimately with DeFi on mainnet Ethereum through that bridge, but also there will be elements that we know will be unique to NFTs, and so we're just really excited to see that develop.
That sounds fantastic. I'm going to change.
Got an NFT you want to sell?
I do have an NFT I want to sell. I have a bunch of them actually. Well, speaking of NFTs, he said segueing. You saw CZ, the wonderful CZ, the brilliant CZ from Binance earlier today.
Yeah, great session.
Yeah,
he was really high quality.
And you know, he said, do your NFTs on Binance Smart Chain. We can do them cheap. Now I know there's been a certain amount of tension between the Ethereum world and the Binance world.
Creative tension, healthy tension.
Healthy tension, creative tension. So what are your thoughts on BSC? Is this something you just said it was healthy tension. Are you all right with it?
Well, first I have a huge amount of respect for CZ, just doing a brilliant job on mapping out that business and executing. And certainly we have different ethoses and business models and business patterns. We are way more focused on adhering to rigorous decentralization for mainnet, but we also consider centralization something that is sufficient for its context. In the public permissionless context, the kinds of attackers that you need to model, the kinds of threats that they bring are spectacularly powerful. And so you need to try to figure out maximal decentralization across every dimension that you can think about, power grids, nation state, laws, protocols, developers, etc. CZ's solving a different problem. He's solving that problem really well. He's trying to build successful businesses. And you can think about it similar to how the web developed or the internet developed. Essentially, as things started to get interesting to the population, AOL sprung out, and CompuServe sprung up. And so actually, AOL, one of their carpet bombing marketing strategy was to airdrop CD-ROMs everywhere. I think
we called it mail in those days, Joe. Mail,
yeah.
Yeah.
Well, you don't think they called it airdrops?
No, I don't think so. I think they called it junk.
So at one point, I believe 50% of the CD-ROMs on the planet were being manufactured effectively to distribute the AOL software. And so AOL did an amazing job in onboarding the early majority. So Ethereum essentially has the innovators and the early adopters, but now we're crossing the chasm, and it's time to onboard the tens and hundreds of millions, moving on to billions, and so you need more centralized systems because we're not sufficiently scalable yet or usable, or I mean it's still a technology that in many ways is rough around the edges. And so projects like Binance, like BSC, are doing a great job and getting paid well for onboarding the tens and hundreds of millions alongside us into the ecosystem. So we're grateful for the help from other protocols to onboard all these people. And we see all of these systems as constituting the Internet of Blockchains. I think the ones who are focusing on decentralization, especially rigorous decentralization, are going to stick around longer, just because in the previous era, business was achieved by companies in essentially an adversarial relationship to their consumer, even under the best of circumstances. And so we need to get rid of that sort of platform risk for everybody in every situation, and many of the less decentralized projects will likely find some place in the Internet of Blockchains.
Okay, I see the connection now to the AOL disks. In other words, what you're saying is places like AOL were super important to the growth of the internet, just because they brought people online, and then once they got there, they realized the limitations of AOL, and then
but those disruptive technologies, the four horses that I mentioned earlier, they are super powerful. They start out life really difficult to use, difficult to understand for the older cohorts, for the successful businesses. They're rough around the edges, and people get cut until we harden these systems and smooth out the usage of these systems. But the reason people see them as disruptive technologies is because they offer orders of magnitude greater value propositions. And so very soon they get adopted by the younger cohorts and the newer startups, and they present orders of magnitude greater effectiveness, efficiency, and business models that you couldn't achieve in the previous paradigm. And so essentially, disruptive technologies always win in the end.
Right. That's certainly been the lesson of the last few thousand years.
But it might be a little rough.
Yeah, it's rough going as it happens. Being disrupted is not pleasant. So, I mean, I think some evidence of what you were just talking about is as Ethereum becomes more mainstream, things like EIPs, which is not exactly an abbreviation that most people know, EIP 1559, we're seeing things like that show up in mainstream financial media. And people at Times and Art Forum and so on are becoming comfortable discussing such formerly gnarly concepts as proof of stake. Can you talk a little bit about the network upgrades that are coming over the next year and a half, and what's the significance of the London hard fork in July, and most important, how is ETH2 progressing? When might we see that merge turn to proof of stake?
So Ethereum 2 is over, and I'll explain why in a second. Just wanted to be a little dramatic. But EIP stands for Ethereum Improvement Proposal, and one of the most important ones, 1559, is going to get implemented this summer, July or August, in the London hard fork. And essentially, Ethereum is unifying. We won't be calling it Ethereum 1 and Ethereum 2 anymore. Ethereum 1 will continue to go about its business being the execution chain. Alongside it in parallel, Ethereum 2 becomes the consensus chain, and effectively the proof of work consensus mechanism from which you derive trust, from which you derive economic security, from which you derive censorship resistance. That goes away, proof of work goes away and is replaced by proof of stake, which is operating beautifully on the Ethereum 2 beacon chain right now. And so it'll be a minimum viable merging essentially that's all that's going to happen. Proof of work gets replaced by proof of stake. One really nice side effect of that is that Ethereum's energy usage will shrink by orders of magnitude. Its energy usage problem effectively goes away 9 to 12 months from now. That'll present interesting challenges potentially for the Bitcoin ecosystem. So looking at the evolution roughly in sequence, we layer 1, Ethereum 1, as it's been called, is the trust foundation in layer 2 or in Ethereum 2. It provides economic security, protects from double spends and censorship, and it gives us digital scarcity, gives us trust minimized collaboration. That enabled us to build decentralized finance, or a new financial infrastructure for the planet. Layer 2 now is being built out. So many awesome protocols that are competitive and collaborative and trying to figure out what it will be to build decentralized applications on layer 2 of Ethereum, because that's where all the apps are really going to be. It's effectively scaling things out, and we're going to figure out how to communicate directly between the layer 2s and over to different layer 1s. All the layer 2s will be anchored into Ethereum, and will have nearly the same security guarantees as Ethereum. Some will have slightly better guarantees than others. Soon, 9 months from now, 12 months from now, the merge will happen. So the execution chain will merge with the ConsenSys chain, and they will be powerfully coupled to one another with essentially a new invention. That new invention is called Ether, but Ether will be evolving from being a sound money, as Bitcoin is, and this is based on thinking and work done by Justin Drake. There's a brilliant 2-part podcast on Bankless, where the Bankless brothers, Ryan and David, have a conversation with Justin, and they describe, or Justin describes, ultrasound money, which is a term I think he invented. Ultrasound money is just much better money than sound money. Our planet has seen gold be sound money and Bitcoin be sound money. Listen to the podcast if you want to understand what ultrasound money is. It's going to change everything. Finally, layer 2, which is being built right now on Ethereum 1, gets supercharged because on Ethereum 2 we will have many 64 to start data availability shards, and so layer 2 technologies need tons and tons of data to operate, and so that's what Ethereum 2 brings.
So you're very optimistic that everything's going to happen on time in that time. Great.
It always happens on time.
It always happens on time.
It doesn't. Yeah.
I'm getting. Apparently, we've run out of time. They need this cloud for a bar mitzvah after this.
Right on time.
Yeah, but thank you so much, Joe. It's always a pleasure to hear what the future looks like. Thank you.
Thanks, Josh.
Bye.